Hey everyone, it is Evan here from the Trade Risk on Tuesday, May 7th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So it's only Tuesday, but it's been a wild week out there. As the saying goes, risk happens fast, and we're seeing a nice uptick in volatility this week. Started yesterday, thought maybe it was over yesterday, and then it came roaring back here on Tuesday's trading session. You can see right across the board, all of the major indices down just about 2% on the day. 5-day change numbers all in negative territory. We've lost the 10-period simple moving average in all of the major indices, and we're starting to lose some of the 50-period SMA, which has been rising for all of the major indices and continues to rise, but it looks like we're starting to challenge it right now in the Dow. Everything else still holding above the 200 and the 50. If we scroll down to the sectors, you can see just a sea of red now, tilted to the downside by materials, energy, and semiconductors. And on the upside, we have healthcare, biotech, utilities, which are trying to kind of hold up here, best in class on relative strength basis, just on a 5-day performance number, but still negative. For the major markets, it's all VIX here, 62% pop over the past 5 days. I think we got about I think it's really just in the past 2 days, we've seen a 62% pop. So we'll talk about that in just a moment, followed by TLT and 10-year rates also, or 10-year bonds. And then on the downside, we have China, USO, and emerging markets. So let's take a look here at what's going on into the charts, into the S&P 500 cash market weekly time frame. This is where we like to start our analysis. And really, you know, the theme of the past couple of videos has been this notion of price acceptance after the S&P 500 and the Nasdaq has made new highs. That's what we wanted to see, and we were off to a good start. We were accepting those new high prices. We started to get the Russell 2000 breakout at the end of last week. Things started to look good for the bull case, and as we said, risk happens fast, and suddenly we now find ourselves rejecting these new highs and failing to accept the new highs set by the S&P 500. Now, maybe it's temporary, maybe it's not. What we do know, though, is that the S&P 500 clawed its way back up to new closing all-time highs on a daily and weekly basis. We stayed up there for, call it 2 weeks. We did have some volatility last week, intra-week, but we managed to close strong, and we basically talked about in our last video that, you know, the lows here from last week, around 2,900 even, will be the important kind of upper level to sort of hold here, given the sort of range that we saw last week. And then now, as we came into trading this week, Sunday night futures were opening up quite negative, and we started the volatility right after the open, or really in the futures open on Sunday. And we started to probe these lows again and started to thrust our way off of this key level, the new all-time highs that we made. You really never want to see that expansion in range, that expansion in volatility, you know, at those key levels. That's what you need to pay attention to for potential trend reversals, and you're starting to see that now. Again, we don't know how far. Maybe this is the end of it. Maybe it was just a 2-day shakeout, but we need to be prepared now that these all-time highs should have been rejected, and we are now closing below the past, at this time, 3 weeks worth of lows. It's of course only Tuesday. We need to see how this week shakes out and how this week finishes out. So if we zoom out here, 2872, we're back to this level. We've had that been, you know, that level's been on the chart now for a good amount of time. So we're back at this support zone. We'll see if it holds as support for tomorrow and for the rest of the week. We are down 2.5% here in the S&P 500 as it stands on Tuesday, below the past several weeks lows. Let's see how the bulls can handle it. Let's see how eager dip buyers are pulling off of these highs, or do we have more of a pullback to sort of ensue here? 2800, that is the next bigger intermediate level that I'd be paying attention to. And if we see a close kind of like this towards the end of the week, closing near the lows, or 2872 or under, I would start to think about 2800 as the next logical kind of support area to pay attention to for the S&P 500. Now, if we go down to a daily chart, we can see just a little closer how tricky this move was here to start off the week. Remember, we had the week Sunday night futures open, And when we look at Monday's session here, so if we just dial it back a little bit to Monday's trading session, which was this candle right here. Notice where we opened on the day, 2,900. That was Thursday's lows. That was the prior week's lows. And we found, well, we actually opened around 2,910, and we probed down to last week's lows at 2,900. And we found a reversal there. We found buyers step up, and we drove higher all day and basically had this nice recovery. Not all of the losses, but certainly the majority of the losses. And a session like this makes you think, well, maybe the worst is behind us. Maybe that was a quick shakeout. Buyers stepped in. Life is good again. But then, of course, we came into today's session with another gap down. Started the day off, basically, 1.5% from the prior day's close again, and then basically 1%, and then closed all the way down. And this time we did not recover these losses intraday. Buyers did not step back in. We, in fact, lost support. Everyone that bought yesterday is now underwater here, and we're closing back right around that 28.72 where we broke out from in early April and found some support there in the first or so week. So a little bit of a rally here at the end of the day, but still a very weak close. Certainly gets awards to the sellers there for driving us lower and closing us lower. And if we look at the VIX, over the past 2 days here, look at this move. We saw basically from Friday's close, where life was good and life was rosy, we basically had a 2-day 64% move in the VIX all the way up to 21. So from a 12 handle, or I guess 13, upper 12s, we close now at 21. And, maybe this is actually, more on a bullish signal here in the very short term that everyone seems to have rushed out. There seems to be certainly a fast flight to protection. And maybe this type of very fast move here in the VIX is actually some type of short-term capitulation signal there. Certainly not a prediction, certainly not a bet. I'll let you decide that, but that's a very quick move into volatility there, and we'll see, certainly how the next couple of days shore up. All in all, when we look here at the S&P 500, 2872, that's what we're going to want to see hold. 2800, that's the next bigger level, and we do have a gap to fill back here. Back here from the 29th of March. So take a look here. Closes right around 2836, it looks like. But we do have a gap here, and might be some in the other major indices. Maybe the market's destined to go kind of probe that area and see just how interested buyers are back around those levels. So S&P 500 getting a little bit of a shakeout here, and we're going to see now, based on the end of the week, if this is more than just a shakeout and can pave the way for a bigger pullback. The IWM, this was the bright spot last week. Remember, we talked about this breakout on Friday, closing at new multi-month highs. And notice, though, the IWM, certainly a mixed bag here. So the breakout clearly being rejected. We did get no follow through. We tried to get follow. This was a big reversal here on Monday as well. It was in fact a bullish engulfing bar here, where we opened yesterday below Friday's lows, and then we rallied all day and took out Friday's highs. So we in fact had a very marginal kind of bullish engulfing day there. But notice we gave it back up today, and it's sort of at an interesting spot because yes, the breakout has failed, but really there hasn't been any technical damage here now in the IWM. And it's funny to say that, because the IWM had been the sort of stagnating market here that we were waiting to see, does resistance hold here, and is this the first to break down? This was sort of the questions we were asking last week. Or is this going to be the new leader where we see rotation into it? Based on Friday's close, we started to think about this as maybe being the potential leader as some of the other major indices take a break. And that still, that still is actually a pretty fair interpretation right now, because if we look just again at the S&P 500 as it's breaking trend and breaking below multi-week lows here, or the past several week lows, we actually have the IWM that yes, failed momentum breakout, but is still holding above this trend line here. And again, it's holding on for dear life. It's very close right now. One day of follow through tomorrow can certainly change the picture, and I think that's what we want to pay attention to as short-term active traders. Can we get follow through to this breakdown? breakdown, can we get the IWM joining the party to the downside, that will certainly give the sellers, the bears, a little more credit here and a little more of a push in their direction if we can start to get the Russell 2000 breaking down. So I think this will be an important one to watch. We have this trend line here. We have last week's lows at 155.68. We're still above both of them. So let's see how this story plays out here into tomorrow and into the rest of the week. MACD still pretty much in healthy positive territory. Last but not least, we look at the Nasdaq 100, kind of mixed here, sitting in between what the Qs look like in the S&P 500. It is starting to close below last week's lows, in fact, the past 2 weeks' lows. So certainly pretty, pessimistic there in the short term that it's losing the past 2 weeks' lows. MACD still very healthy here, coming off of high levels, and it is still, certainly has had a tremendous move over the past couple of months here. So no one should be doubting or, being too surprised at even a 2 to 5, 6% pullback now in the major indices after 20, 30% rips off of, 3 to 4 month lows. So I don't think that should be any surprise here. But when we just think about some of the short-term action here in the Qs, you can see it's right back starting to lose and challenging these prior all-time highs back from October, which were more or less around this 187 area. We're about $1 or so below them right now, and starting, again, a nice kind of rally here off of the lows end of day. High volume though, and kind of that mixed bag where we have the pullback off of those highs, just like the S&P 500 is experiencing, but not as bad, not as deep, hasn't done as much technical damage there as of yet. So we're kind of waiting to see how the Qs act here. Can the Qs firm up, and can the IWM firm up here and act as leaders while the S&P 500 and perhaps the Dow start to underperform or at least go sideways? So lots of action, lots of fun here. Volatility up, ranges expanded. Let's see how we get through this week. We, of course, have all the trade, deals, fund negotiations on deck or supposedly on deck. Lots of probably headline risk here over the past couple of days. And, the VIX at 20, let's respect it. Maybe it is a quick move that is sort of a blow-off false signal or a contrarian signal here on a short-term bottom, but let's respect the fact that we do have a VIX over 20 because, again, risk happens fast, and this could easily go, to 25 or 30, and we don't want to be left flat-footed altogether. So that is really the moves there in all of the major markets. Let's take or major averages. Let's take a look at some of the major markets here. We got TLT, so sort of our safety haven here. TLT rallying today, up 1% on the week and starting to move off of this retest here. This has been, had this nice technical breakout at the end of March. It rallied up to about 126, got real frothy. It pulled back, retested the breakout zone, and so far it looks like it's trying to hold and rally back to these prior highs. We still have our position here that we were involved in last week, or 2 weeks ago at this point. Close to 2 weeks ago. Yeah, it looks like 2 weeks ago at this point. So we do still have our TLT long position on here, looking for higher prices, looking for potential retest of these highs, and then we'll start to reassess there. But TLT looking good on this retest, acting as a safety haven and doing what it should do. GLD also starting to perk its head up above this prior support here. Looks quite interesting as a potential kind of false breakdown signal here, and now rallying back on this recent momentum divergence. GLD a little bit more weekly close back above 121.50 or so. Think can potentially get that ball moving to the upside. Nice squeeze back above this support and suddenly find some life there in GLD. Would like to see more volume today. Wasn't the most, didn't have the most conviction behind this move, but still technically kind of reclaiming this breakdown area, this prior support. So I think it is an interesting spot to pay attention to. Silver pretty much in the same line there, trading right back to $14. This was the key technical support. Then it was a breakdown. Now we're flirting with it again. So waiting to see both of the metal situations here and whether or not we can get a move and rally back above those key support levels. Last but not least, if we look at energy here, we go to oil. USO back to last week's lows, still trying or looking like it wants to try and firm up here, seeing a little bit of rally off of today's lows, coming in where we rallied off of Thursday's lows. It's been in a short-term pullback. Looks like it's trying to stabilize here. Volume has picked up, so kind of a cross-current battle there. I think if you're a shorter-term trader, you're seeing a little bit of volatility there that you can start to jump on board of. And natural gas finally here, looking like, again, it's trying to stage a little bit of some type of bottom here. It's still in a technical tough spot on a bigger term basis, but what we can see now is that it had this thrust off of the lows back here on the 25th and made a push off of them. It started to pull back here, and notice the nice strong kind of positive momentum divergence here as it tries to put in some type of higher low above the lows made from just a couple of weeks ago. So interesting developments there. If you're short-term active, nimble, may be some long opportunities there, but bigger picture, this is still in a real tough spot. So you just have to know your risks if you're looking to trade this name or this commodity. So that is it. That is what I have. A little bit of volatility there. Stay safe, protect yourself, honor those stops, all of the fun risk management things that we need to think about and put as number one priority in this time. Be defensive, protect yourself, live to trade another day. These are all things that we want to be thinking of as active traders, and as of course, knowing your time frame is equally as important. So that is it for me. Thanks so much as always for tuning in and watching. You can subscribe on our YouTube channel or follow us on the Trade Risk, thetraderisk.com/blog. Thanks so much, and we'll talk to you in the next video.